Good morning, it's Tuesday the 13th of December. This is the Phoenix Blue update presented this morning by Tom Colley. Yesterday we had a significant reversal in sentiment in the markets. On Friday we had seen a follow-through on dollar strength. We'd had the ECB meeting on Thursday, but we basically saw sentiment reversed yesterday, and we'll have a look at that on the charts in a moment. But first, a look at the news, and it will be brief because there isn't a lot. There was no high-impact news yesterday. The only thing we've had so far today, or overnight, 2 a.m. UK time, we had the industrial production from China, which came in just ahead of forecast. So little really to say about that. The thing to look forward to today is 9:30 on the pound this morning. We have CPI, but it's year-on-year numbers, not quarter-on-quarter or month-on-month. That means it's more significant, and particularly significant because we'll help us understand how the devaluation on the pound following the Brexit vote is influencing inflation in the UK. So we'll have our eyes on that. Other than that, nothing significant today. Obviously, all eyes are ahead to Wednesday for the Fed rate announcement, statement and press conference. Now, I mentioned we saw a reversal in sentiment yesterday. Well, this bar here was the Friday's dollar strength. We saw that reflected in all the majors and minors. We hadn't seen this bullish move on the dollar index reflected across the board. That was more a realignment with the euro, so wasn't reflected in the yen. What we saw yesterday was this bearish engulfing bar on the dollar index. On the other side of that, we saw bullish engulfing bars on the euro, the Kiwi, and the Aussie. And as we go and look at the charts, we'll see significant price action with that playing out on other markets. And here's the first of those. Here's the yen. We had a test and rejection of the 116 level here. Price came down. Is currently, or on this chart, although I think it's now moved away a little since I took this slide. What we're looking at here is an intraday head and shoulders, a retest of the neckline. So we're short this market. We're looking at what is really possibly the reason is profit taking. We're coming towards the end of the year. Profit taking. We've had this long run post the Trump election. So there's natural reasons for the profit taking. There's also the caution with the Fed ahead this week. Expectations are that with the 0.25 basis points already priced into the markets, the markets aren't expecting to be surprised. So we can expect to see a sell-off in the dollar. And in reaction to that, or on the converse of that, we'll see a strengthening on the US dollar JPY chart here, which is to the downside. More in question is the degree of how strong the dollar correction would be in that scenario. That will depend upon how much forward guidance we're giving into the Fed's plans for further rate hikes going through 2017. So the markets will be looking to take a more cautious position ahead of the meeting. But then the question is, where do we go from there? Okay, over on the euro, where here's the bullish engulfing bar. As we can see, we'd had the result of the ECB meeting, press conference, and QE extension. We'd had the dollar strength playing out on Friday. Now a lovely bullish engulfing bar there, changing the sentiment in the market. Over on the Swissy, well, we had a high test pin bar here from the level up here. We took an entry and ended entry off that. That followed through again, emphasising what we've seen there in the change of sentiment. So across all the markets, that's a substantial technical change to the market. We haven't anything definitively fundamental to identify that, but technically the fact that it's happened across all those markets to a greater or lesser extent paints quite a clear picture. We can then factor in what the potential expectation from the Fed meeting is, and our intention here at Phoenix Blue is to keep these entries, hopefully get stops to break even ahead of the Fed meeting, with a view to having no risk on the table, but hopefully being able to take advantage of the more probable outcome. Okay, the other big item in the news is crude oil. We saw a gap up and a push right up to $55 yesterday. This is on the back of the weekend agreement between OPEC and the non-OPEC oil-producing companies. I've read this morning that if they all abide by the rules that they've set themselves over the 6-month term of that agreement, they could be reducing the surplus stockpile of crude oil to the tune of 50%, which would be very significant for the markets. There are some outliers on there, being those that haven't agreed and are actually also looking to increase production. But in principle, OPEC have achieved what they set out to achieve. The question now is really whether the shale oil coming out of the States kicks back in, or whether what they've done controls price and quite possibly sees more of a ranging market on crude between this level here of about 52, 55 and maybe reaching 60. But that seems to be what the expectation is going to be going forward. But as we know, as these things, actual events can very much change that expectation. Over on the S&P and equity markets in general, we saw a pullback from highs yesterday. These markets are still very seasonally strong. If the Fed come through with what's anticipated and don't do something that the markets take positively, we could possibly see this push through right through to the end of the year. Our bias still remains long in these markets. We'll just be looking for technical levels to trade these to the long side. The FTSE did pull back quite hard yesterday. It pulled back below 6,900, but it seems to have taken a pause there. That was probably more based on the pound strength that came in, although the pound didn't give us a bullish engulfing bar. It did give us a very strong bullish day. So that could have been the reason that the FTSE pulled back as hard as it did. But we'll still be watching that because our bias is still long that market, along with all the equities markets. Okay, guys, that's it for today. So what we've really summarised is that we seem to have seen a turn in the markets, or the initiation of a turn in the markets into the Fed agreement. So we're looking to take positions ahead of the Fed without leaving risk on the table. Okay, if you've got any questions, please either leave a question on Skype, email us at info@phoenixblue.co.uk, or me directly at tom@phoenixblue.co.uk. Have a great day's trading, and we'll speak to you in the morning. Take care. Bye-bye.